Hello guys, it's Tom here from the WB Trading team. Now on today's video, because it's the start of 2023, I want to go through some general advice that I would give traders if they were just starting out or if they're looking for areas to improve or change in their trading. So at the start of every year, I always go through these aspects with traders, whether it's on our course, on one-to-ones, or whether it's just chatting with traders in general. Some of these key areas that I see time and time again that traders don't necessarily focus on, that are really easy to implement and that make a huge difference. So we're going to go through these today. We're going to go through the areas that I really think you should focus on, and hopefully at the end of the video you'll have an idea of what you need to begin and start with your trading in 2023. Let's get into it. Just very quickly before we dive in, if you're still struggling with your trading or you'd like to know more about how mechanical edges are traded, I've put together a free video course for you that will map out and explain everything in detail, along with walking you through exactly how the mechanical rules actually work. If you'd like to watch that after this video, I'll pop a link in the description. You can click through and you can watch that straight away. So I want to start by focusing on one of the most crucial factors. If you're a new trader or if you've got a little bit more experience, risk management should always be top of your list. If you watch some of our previous videos, you'll know I do go on about this, and it's for a good reason. Risk management or poor risk management, or even no risk management, is the number one reason traders fail. They're risking 10-20% of their account per trade. It's not sustainable if you hit a drawdown, and recovering from it, even just from the psychological point of view, is incredibly difficult. So, if you're part of our course, you'll know this, and if you've spoken to other traders, I'm sure you'll have heard this. Risking 1% or lower should always be a focus. You should never lose more than 1% of your total account per trade. To help you work that out, working out lot sizes, position sizes, price per point systems, use a position size calculator if you need. There's plenty of great ones online. I use one from a website called Baby Pips. If you're using, say, MT4, MT5, there's plugins you can add in to basically help you work out that size. Other brokers will have tools as well. Also, if you're trading multiple strategies, so if you're on our course and you're trading a number of our strategies, it's good to have a separate risk management for each strategy. So making sure that you don't have one large account pot and you basically work out 1% for every strategy using that single account figure. Have a different account value set up for each strategy. So if you do hit a really good streak or a really bad streak on one of the strategies, the risk management of other ones won't be affected by that run. They'll all be kept unique. Just a little help, really. I mean, it's not vital, but over the years, it's helped me really manage each strategy individually. The key point here, though, is, as we've said, 1% or lower has to be the focus in terms of your risk management. Without that, you're really not going to be able to succeed in trading. The next step I always suggest traders focus on, and it's a really boring topic, and I'm sure some of you will be rolling your eyes. Now you've seen I mentioned this, keeping a consistent journal. Journaling is one of those subjects in trading that, if you speak to large successful traders, they're going to tell you that it's vital. But on the face of it, it seems a little bit pointless. And I can remember when I started trading, I had the same opinion. The fact is, without keeping a journal or a trade record of what you've done, it's impossible to see if you've made any mistakes. It's really difficult to track your progress, and it's almost impossible to see where you can improve as a trader. A journal doesn't have to be complicated. It just has to have, mine has about 10 or 12 columns, I think, just in terms of entry information, exit information, and my opinion on the trade, what I did well, what I didn't do well. It can be as simple as that. Aiming to fill this out every day is really vital as well, because the trades are then fresh in your mind. You don't have to fill out as you're trading if that's too difficult, but making sure you don't leave it like a week or so, because coming back to remember what you've done in a trade after a week is going to be really difficult. As I've said, include a notes or thoughts section for each trade, what you think you did well, if you did make any mistakes, if you missed an entry, if you put the trade size on wrong, all of that stuff. It will help when you come to review your trade, which we'll talk about in a second, and basically it'll just help you improve as a trader. Finally, like the risk management, I always recommend keeping a separate journal for each strategy. It just makes things really easy to manage and not to get conflicted between what data am I filling in for this strategy, what data am I filling in for this one. It can be as simple as just different tabs on an Excel worksheet. That's how I do mine. It doesn't have to be overly complicated, but it makes a big difference as well. Following up to the recommendation of keeping that journal is coming back to really why we want to keep that journal, and that's because we need to review it. So it's all well and good keeping a journal, and I know quite a few traders that do this and then they never review it. They think that just writing down the information is enough. And if you write it down and you don't look at it, you don't use it to improve, it's almost pointless keeping that journal in the first place. So this comes hand in hand with what we've just talked about. As I've said here, I spend every weekend 10 to 15 minutes per journal just going through the week's trades and seeing, okay, did I place everything correct? Look through my notes and see, did I make any mistakes? If I did, or if I find any mistakes in my journal, then I know what to focus on in the week ahead. This is absolutely vital as well when you're starting out. Doing that review each week, you will make mistakes in your trading as a newer trader, absolutely. Even I make the occasional mistake, not that often now, but I can remember back at the start I did. And having that review every week means that you know what to focus on, even write it down on a post-it note or however you're going to be able to remember it. Make sure that's your focus going into the week ahead. That's only possible if you fill in your journal and if you review it. And as I said, those two things together, that will help you improve quicker than anything else. The final point I want to mention is a question that I've had from the traders on our course quite a lot actually in the last couple of weeks. I thought it'd be worthwhile adding to this video. It's when do I progress between a demo and a live account? A lot of you may be starting out with your trading this year, starting on a demo account, which is the best place to start, absolutely. But then you're going to come to a time when you think, am I ready to move up to a live account? It's going to be different for every trader, so it's impossible to have like one rule that fits everyone. In general though, I say to our traders, if you can trade on a demo account for 2 weeks consistently without making any mistakes, so basically going through that review process on your journal that we've just talked about, then start out with a small live account. Nothing huge, don't put your whole capital in the account to start with. And then basically repeat that process. If you're comfortable with a smaller live account, instead of the demo, you can still trade correctly. After 2 weeks, maybe look to increase the capital that's in that account. Do it gradually though. There are going to be challenges that you find in a live account that you don't find in a demo. The emotions are there because there's real money on the table. You should always treat a demo account as a live one. And okay, that sounds easy in practice, but realistically, there's always going to be a little bit of extra pressure, a little bit of extra emotion that creeps in once there's money on the table. So go through that 2 week by 2 week process. That's the best approach to take, and slowly you will be able to grow your live account, both by your trading results and by depositing extra capital if you need to, once you feel comfortable. If you are making mistakes, pause, just go through until you're comfortable, until you hit that 2 week period without making any errors. And there we are, guys. So I know that's probably quite a little bit to take in. They're my key areas though. If you're beginning your trading, if you're looking for areas to improve going into 2023, those are the areas that I would focus on most of all. Okay, there are plenty more, finding a good broker, understanding the strategy rules, finding a good strategy there, a couple of things that I probably could have mentioned. We've covered those on previous videos, of course. For more info, what I would always say is, look, if you want to chat with one of our team about how we trade, about anything that we've gone through in this video here, book a call in. Obviously, it's going to help a lot more having a chat with a trader rather than just listening to the advice here on the video. But I hope this is a great starting point. As always, thank you very much for watching. Hopefully, I'll see you on the next video, guys. Take care.